Welcome to another episode of InvestorPool, a carpool series that's all about real estate, finance, improving your knowledge, but also through the guests we bring on, improving your income. Today I'm joined by Rania Kabbara from TAX STORE North RYDE, an experienced and professional accountant who has loads of insights and tips to share and to talk to you about all things property. I'm excited to share the seat with her today and look forward to bringing these insights to you on another episode of InvestorPool. Rania, thank you for joining me on an episode of InvestorPool.
Thank you so much for this opportunity, Arjun. I really like it. It's the first time I do an interview in the car, so it's really interesting.
No, I think a lot of the viewers will really get a lot out of this because I've been a massive fan of yours and the content and the things that you've put out in the space of accounting.
Thank you.
And I feel a lot of value will come out of this. But how about we start with getting to understand what got you to the space of, being in business as an accountant?
Okay, initially back in the days at the uni, I started as banking and finance.
Okay.
Then I discovered my passion to accounting. So I changed my major and I specialized in financial reporting, managerial accounting. And then I've worked around 14 years in the corporate world.
Right.
And I decided that it's time for me to use all this experience and knowledge to apply it for SME in a business on my own.
Right, and what have you enjoyed most about the journey and what you do today?
I enjoyed the most it's for me like riddles.
Okay.
The client comes with a specific problem and then we try to investigate the root cause of these problems and we come up with a solution that suits the client. So for me, I enjoy it because it's exactly like riddles.
Okay, that's interesting. I like that. So you love problem solving. That's the main
Yes.
thing. Now, as you know, a lot of people in the property space, they go through what they might consider problems, but for you, it might just be another day of solving certain things. In terms of some insights or support for people who are perhaps looking to purchase their first investment property, what are some basic tips that you can give from an accounting aspect?
They need to understand what exactly they want to achieve from this property. Is it an investment property? Is it their own house that they are buying? Are they after tax benefit or they are after growing their wealth? So they need to understand what they are trying to achieve and then talk to professionals like yourself to get the most out of the investment that they are trying to put in.
So what it sounds like to me is really, before you get started and go all crazy about it, get all the experts into one space and understand the why, right?
Exactly, why? What are you trying to achieve?
Now, when people go into it, a lot of people ask me some of these questions and obviously I direct them to the right people or sometimes they have their own accountant to make this discussion, but they're always talking about the right structures.
Yes.
What helps you identify perhaps the right structure for an individual when they're looking to purchase a property? What are the things that people should consider?
Okay. Well, basically, if they're buying investment property, they can put it under different structures, starting from their own individual names, partnerships, companies, trust, or SMSF. There's a lot of consideration that we look at. The first one is the client trying to achieve some asset protection? This plays a big role in choosing the proper structure. What is the investment portfolio that the client has? Because if he has a lot of investment income, we need to look at structure where he can offset some of the taxable income with the negatively geared property.
Right.
And how many party is involved in this property, who will want to access the investment property income, how they want to access it, because some structure limit the access of the investment income of these properties. So there are several considerations. Another one is the exit strategy they have, how they are going to sell it, and how much we expect capital gain out of this. Some structure will get capital gain concessions, others won't. So it's very important to look at all these considerations at once and try to come up with the best possible structure for the client situation.
See, the fact that there's so many things to consider, it makes it more important that we need the right people around us to help us.
Yeah.
And overall, what it sounds like you're saying is there's the before, your current situation, the current in terms of how you plan to operate this investment property and the purpose of it.
Yeah.
And then like the after, do you plan to get out of it or do you hold it? It seems like these three life stages almost they need to consider, right?
A holistic plan that shows before, in the middle, and after.
What do you feel are some of the biggest mistakes investors have done in terms of the accounting structures? Because yes, there's the good stories and how you help people, but I'm sure there's been a couple of not so good stories, right? What are things that you can share that in your experience you've seen and how people can avoid it?
In my experience, I've seen people that decide on structure on their own because they've listened and they've heard their friend, they had a property under a trust and they had a property under a company. So they take their own decisions and they jump into properties and they put them under the wrong structure. Basically, the tax efficiency of this is heavily relying on the current situation of the client. And it always differs between clients how they have their tax situation sorted.
Right, so that just not to rely on friends all the time
Exactly.
for that sort of...
Just seek professional advice.
Okay. And is there a specific moment that you can think of where okay, here's a big no, let's just think of that particular scenario where, okay, this happened, they were buying this property and they did this, it was a big no. Is there something that comes to your mind from an experience that you can think of?
From a tax point of view, yes, I've seen clients buy property and put it under a company and they were planning to sell the property quickly, but
Right.
they didn't know that they won't be able to get the 50% discount on the capital gain.
Right, so simple things like that,
Yeah,
right?
simple things. They were after the low tax rate on the companies, which
Yeah.
is 27.5 to 30%. So they thought that they're saving some tax there, but they had to pay the difference.
It's
with
like
capital
you
gain.
want one thing, but you let go of the other.
Yeah,
and
the whole process was a waste of time, and
Yeah.
they lost a lot of money.
Yeah,
with the capital
yeah.
gain.
No, that's good. That's good to share. And how about in terms of people have also come to accountants where they say, I want to purchase a property because I'm paying too much tax.
Yes.
It's a common thing, right?
Yes, it's a
Now,
common thing.
I have an understanding where, yes, I get that, we should look at ways to reduce it in the right way as possible. But what do you think, is going through this customer's mind, and how as professionals can we help them think bigger on the bigger picture, not just from that tax perspective?
Yeah.
What goes through your conversations with these type of thoughts?
Honestly, probably because of my background as managerial accountant, I always say you first look at the return on investment, and then we look at how to make this return on investment in a tax efficient
That's
manner.
a really
So
good way to put it.
you should never choose a property because of the tax benefit. You should think
Fantastic.
about the return on investment, the growth of the property, and then consider how to manage the tax.
That's an awesome tip. No, thank you for sharing that. And if you've thought of I guess families, that comes a big component with, I guess, the right structures and families when working together in property. When families look to, I guess, build wealth and build their portfolio in later stages of life, what do you think are things that they should consider during that stage of their life?
We need to look at the family as a whole and consider the different income tax bracket that they have. We need to look at the succession planning because the structure also impacts how people can access this investment after the owner's death. So we should think about mainly succession planning and the different tax bracket they have, their situation, and how we can minimize the overall tax for all of them.
Yeah, so it's not just considering, oh, I'm the husband or I'm the wife looking to buy. It's no, it's not just about you, it's about everyone.
Exactly,
Is that right?
about the whole group in the family.
And business owners, I guess a lot of your customers would be business
Yes,
owners.
yeah.
As there are a couple of myths that business owners feel. It's too busy. I don't know if I can afford it just yet because the income's not like a salary where it's coming in all the
Correct.
time.
Yeah.
How do you help business owners go through that transition? And what do you think business owners out there should do if they want to understand if they're ready to look at investing in property?
Well, the first thing we do with business owners is to make sure that they have some steady revenue streams. We help them change their business models to make sure that their cash flow and their income is coming on a contractual basis to be able to get a proper financing for their expansion, whether it's any type of asset, investment properties or other commercial properties that they are considering. So this is the first thing. The second thing is when choosing property, the main tips I give to business owners is that think about property that will work for you now and in the next 5 years. Now that
Really
you're
long
growing,
term.
long term. So you don't want to buy a commercial property, for example, now, and then next year decide that it's too small for you or too big for you. Just
Right.
think about something that will work for you now and at least in the next 5 years.
Yeah, so really growth planning as well as that budgeting coming into
Yeah,
play and a few
yeah.
things. Are there any tips that you feel, property investors actually looking to exit their property should be considering at the time of, calculation or putting things on the market? Because I know coming sale time is also another stressful moment. It's not
Yeah.
always the buy. Are there any tips that you feel could help investors who are looking to sell?
Yes, I would say after talking to professionals to know if it is the right time to sell, then they need to talk to their accountant to see how they can work around the capital gain, if there's capital gain implications, and if there are some mitigation that they can do to reduce it.
Right, so just really, again, coming back to that professionals point, getting everyone together
Yes.
and going from there. Rania, that's actually been really helpful, and I'm just, want to say that from a tax perspective, I'm actually learning a lot just sitting here with you, like just the little things that
Thanks
are
a
coming
lot.
together. I mean, I want to go into a different part. We often talk about residential investing, but you mentioned something interesting, commercial property.
Yeah.
So with commercial property, there's a lot of different moving parts.
Yes.
But from an accounting level, do you feel commonly, people should be considering more advanced structures for them because of the income levels most of them have? Or do you feel that, again, it's similar to residential property when you start reviewing it?
It all depends on, like you said, the income level. Because whether it's a commercial property or whether it's residential, the level of income that comes and the possibility to distribute the income and the overall portfolio that they have very much decide which structure we are going to choose.
So that comes back to that longer term planning again,
Yeah,
right?
yeah.
Self-managed super fund. That's
Yes.
always been on people's minds.
Yes.
They want to create a better future.
Yes,
However, there are a lot of changes in the lending space and who's doing what and who's not doing it.
yeah.
And as you know, when competition becomes lower, costs start to go up because they don't have to, have those same margin decreases. People who are considering self-managed super fund property, sometimes people think it's like, I'm not sure, it's very expensive. Is it actually as expensive as people think, or are there ways to make it cost effective from that accounting setup and ongoing management?
If they have a lot of investment properties and they are willing to put it in an SMSF to have a tax effective outcome, it won't be that expensive. So the tax benefit that will come out of it will overcome the cost.
So it's
it
sort of
will
like
be
that. Don't try and do it for like just the one place and say that's my self-managed super fund.
Yeah.
Sort of as you grow into it and as you grow the asset base, it will outweigh the costs.
correct, but they need to understand that there are limitations on how you can use the investment income of investment that are in the SMSF, and what you can do with the borrowed funds if they're taking financing, what they can do in the SMSF, and how much they can change the property. It's also very limited.
Again, that's a lot of little things that people need to consider, right?
So they need to understand the implications of choosing an SMSF structure.
Gotcha.
Yeah.
Are there any other last tips that you'd like to share for people who are, maybe getting into the investment game at the moment or have been, doing it as experts that you'd like to share? Some last minute tips?
Last minute tips, I would say, as I always do, always rely on professionals. When choosing the investment property, don't take one simple approach. Talk to a proper buyer agent like yourself that can advise on the best possible property to invest in. Talk to an accountant, talk to a lawyer. Just try to understand the best possible solution before making your final decision.
Awesome.
It's very important.
Rania, it's been great having you on. Thank you so much.
Great
How
to
can
be with
people
you.
how can people get in touch with you if they're looking to, get your support as an accountant and help them out from their property expertise that you have?
They can call me on 02-9157-1000, or they can check our website, taxstorenorth.com.au.
Awesome. Well, that's another episode of InvestorPool. Thank you everyone for watching and look forward to the next one.
Thank you.